Hey, Rick.
Hey, Megan.
I think this will be, let me check my calendar, the last podcast we do in November
I think you're right.
because next week is Thanksgiving.
That's
Well, I
right.
guess we could do it the
Well, maybe
29th.
one more.
So,
Yeah.
a couple more left for the year.
Yeah.
So, for a couple of months, we heard what's going to happen after the election? What's going to happen with the rates? What's going to happen with this? What's going to happen? So now it is after the election, and we don't know what all the results are, but at least we can, make our best guess. So after the election, we can stop talking about that. Tell us what happened on Thursday in the mortgage market.
Well, last week was honestly the best one day I've seen probably in my career. And that spans, as you well know, coming up on 41 or 42 years. I lose track after a while. But look, the MBS, which is mortgage-backed securities, that's how mortgage loans get priced. That had a one-day rally last week at 200 and I think 206 or 209 basis points. That is a monster rally. The best I've seen really in the past couple of years is maybe up 30, 40 basis points if we're lucky. But to be over 200 basis points is significant. And also what happened on that day was as the 10-year Treasury security also dropped 29 basis points. So that's also good news. So that's all great news for rates. And so I think we're starting to see the beginning of what we've talked about for months with respect to inflation numbers and how that's going to drive interest rates. We saw the very first one of those this past week with the consumer price index. So this week, though, which we can almost expect when you have that kind of a rally, we've had a little bit of pullback, but that's just a kind of a break before it takes off again. So although the last couple of days have not been off very much, but just a little bit, not too concerning at all. So I think we're in a really nice channel here for the moment where we could start to see some more improvement. Now, I always want to caution with this. When I say we're going to get some improvement, that does never mean that rates are going to plummet and start dropping like crazy.
Right.
As we know, they don't do that. They
only go up like crazy. They don't drop like crazy. Yeah.
As I always say, my analogy to that is when rates are going up, it's like watching a raging forest fire.
Right.
And when rates are going down, it's like watching grass grow.
Right. Exactly. Exactly.
Right? But we're in good shape this week for sure. Yeah.
Well, that's positive news. I'm happy to see a smile on your face this week when we talk about mortgage rates.
Right?
Yeah, I want to talk a little bit about this podcast that you sent me, and this is from Housing Wire Daily. I love Housing Wire. They have really good information for what in the heck is going on out there. So their podcast, Housing Wire Daily, had appraiser Ryan Lundquist on this week. And I've been wondering, because I know when the market changed before that, the appraisers about 6 months into the market change, they all got the call, adjust the prices to declining. So then they had to make an adjustment in all their prices to a declining market, So that hasn't happened here, but what the Ryan had said in this podcast, which was really great, because I love talking to an appraiser, because they're, I deal with a lot of feelings because I'm dealing with a lot of people, and appraisers deal with a lot of measurements, numbers, and their calculator. That's about it. So what he had said is something, I've got some notes here, that we've always been saying this whole time, that prices really just depend on affordability and what most people can afford to pay in that zip code that they're in. And so some areas, we talked last week about the Black Knight report that property values are decreasing about 2% every month. It's not going to go down to zero. It's not going to go down to, but they're going to adjust until the rate, the payment, the down payment, till everything's sort of copacetic especially for the first time home buyer. So like,
Right.
what Ryan had said in his interview was, that some areas are appreciating or depreciating in a different sense than other areas, which of course is true. Like here in Anaheim, I felt like the last time this happened, and really nobody can tell me any different because I was here and I was in the ugly zone, that cities like Santa Ana and Anaheim get hit pretty quick because we have a lot of first-time home buyers because our houses are smaller. They're 3 1s, 3 2s, 1,200 square feet. That's kind of the era of our housing stock, where homes in Yorba Linda that are bigger, they're kind of maybe somebody's third house kind of a thing. They sometimes this ripple when you throw a rock in the lake and the ripples come out kind of hits them a little bit later. But I think everything I have is selling, and I'm not overpricing things. Obviously, we're doing it based off of facts as much as we can, because most of the houses I sell are custom and they're unique. But everything's selling. They're not selling with 2, 3, 4 offers. Typically, there's an offer, maybe 2 offers, and buyers are sometimes, depending on the pricing, asking for a little bit of a discount, but not ridiculous, like maybe 1 or 2%, not 5 to 10%, or maybe they're offering full price and they're asking for closing costs. So there's definitely some concessions that are being made out there, and those who are willing to bend will not break and be able to get their house sold and move on with their lives.
Yeah, good point. And that's what the appraiser on the podcast was saying as well, that, this is not 2021. I mean, the sellers think they can get over asking price or higher than the next sale. That's, as he said, so 2021, I think is what he said.
That's what he said. Exactly.
And not to be offended by concessions, because concessions
Right.
are working on helping sell homes right now.
Exactly. And you have to know if there's any niche-y things that are available for your house that you're listing. And
Right.
what was the last thing I was going to tell you? I think that's about it. And I have just a few things coming up as far as listings go, but I had to ask for a price reduction last week. And somebody will say, well, when should I reduce my price? And I would say, just base it on the amount of activity you've had at your house. How many people have come to look at it? What are they saying? What's the feedback? If nobody's come to look at it and it's been 3 weeks and your price is way too high. So, it's just, everything's very individual based off of, what the market is sort of telling you, but be flexible. And if you're moving out of state or you're buying another house or whatever the situation is, they're having the same problem too. So, don't think you're the only one. This goes across the board, and most likely you'll be able to get some concessions on your purchase too. Don't get your feelings hurt. Just make it work.
Exactly right. Good advice there, Megan. Absolutely correct.
Well, I appreciate you, and have a wonderful Thanksgiving next week. And I'm thankful for you and all of your knowledge and being available to answer our questions.
Well, thank you. Thankful for you as well, Megan. I appreciate you more than you know. I think you know that already, but I can't say it enough.
Thank you. I appreciate you saying that. All right. I'll see you after Thanksgiving.
Awesome. Thanks. See you, Megan. Take care.
Bye.
Bye-bye.